All right, fam, gather round, because what I'm about to drop on you today is going to make you look at that little green USDA organic seal totally different, and it might even make you rich if you play your cards right. You ready for a stat that made me spit out my oat milk latte? In 2026, the United States government is literally paying back up to 75% of organic certification costs for any farm that applies, while at the exact same time, the European Union is handing out up to 600 euros per hectare per year just for staying organic, and even more during those brutal transition years. That is not hippie folklore, that is cold hard government cheese, and 9 out of 10 new organic farmers have no freaking clue how to actually get it. If you leave this video today without understanding how America and Europe pay you totally differently to go organic, you are going to leave tens of thousands of dollars on the table over the next 5 years. I'm not exaggerating. I have seen it happen. Welcome back to Organic Matters, the channel that tells you the truth about organic that big ag and those boring accounting dudes never will. Today we are going deep, like real deep, into tax breaks for going organic in US versus EU 2026. And trust me, almost everything you think you know about this topic is dead wrong. So grab a notebook, grab your coffee, because this longer breakdown is the full blueprint. Let's start with the brutal truth nobody tells you at the farmer's market. Most folks think there is some magical line on your tax return that says, check here if you are organic and get a big refund. That does not exist. Not in America, not the way you think. And that misunderstanding is exactly why so many awesome small farms stay broke while the big organic players stack paper. Here are the 7 things that most people get completely backwards about organic tax breaks in 2026, and if you nail these, you win. Number 1, the U.S. does not do organic tax breaks. It does organic cashback, and that is better but sneakier. In the U.S. in 2026, the star of the show is still the Organic Certification Cost Share Program. Everybody calls it OCCSP. Here is how it actually works. You get certified organic by a USDA accredited certifier. You pay that fee, which for a small produce farm might be $900 to $1,500. For a dairy or a diversified livestock operation, it can be $3,000 plus easy. Then you take that receipt to your local farm service agency office, you fill out like 2 forms, and USDA gives you up to 75% back capped at $750 per scope. Scope means crops, livestock, handling wild crops. So if you are crops and livestock, you could get $750 plus $750. That is $1,500 back every single year you stay certified. In 2026, they funded it heavier than ever because the 2024 backlog was insane. But here is why 80% of eligible farmers still miss it. They think their tax guy will handle it at tax time. Nope. This is not a tax thing. This is a USDA program with its own deadline, usually October or November, depending on your state, and if you miss it, you get 0. I talked to a blueberry farmer in Michigan last year who missed it 4 years straight. Dude left $4,000 just sitting in D.C. Painful. And pro tip for my American hustlers, almost every state has its own extra cost share on top. Vermont will add another 25%. California has its own pot. Minnesota, Maine, Connecticut, they all have little secret top-ups. If you live in one of those states, you can literally get 95 to 100% of your certification refunded. Like the government pays you to be able to charge a premium. You cannot make this stuff up. Number 2, the real American tax code magic is hidden under boring names that sound like your grandpa wrote them. If you go to a regular CPA who does taxes for dentists and realtors, and you say, I am organic, what are my deductions? They will give you the blank stare of death, because there is no Section 123 organic super deduction. The real money in America in 2026 is in 3 boring-sounding buckets that organic farmers qualify for way easier than conventional guys. First bucket is ordinary and necessary business expenses, that organic seed that costs 3 times more, that fancy fish emulsion fertilizer, that OMRI-listed pest spray, that cover crop mix, all fully deductible as business expense. Conventional guys get that too, but organic guys spend more on these, so your deduction is bigger naturally. Second bucket is EQIP, Environmental Quality Incentives Program. In 2026, EQIP is throwing serious money at organic transition. It will pay up to 75% of the cost of putting in conservation practices that also happen to be required for organic, like hedgerows, pollinator habitat, compost facilities, high tunnels, irrigation improvements for organic. And here is the wild part. You can deduct the remaining 25% you paid, totally legal double benefit. One is a cost share payment. One is a tax deduction. Uncle Sam allows it. Third bucket is the climate smart ag credits that got supercharged after the Inflation Reduction Act and extended in the last Farm Bill. If you are organic and you do no-till, reduced-till, nutrient management, rotational grazing, you now qualify for extra federal and state conservation tax credits that you can roll forward up to 20 years. I know a grain guy in Iowa who transitioned 300 acres to organic, did the climate practices, and his tax credit carry forward is now bigger than his actual tax bill for the next 3 years. That means 3 years of basically no federal income tax tax. That is the American way. Not one big check, but a stack of little hustles that add up to a mountain. Number 3, flip the map over to Europe, and it is like entering a parallel universe where they actually pay you to be a good steward up front. In the EU in 2026, under the CAP reform that runs from 2023 to 2027, going organic is not a tax trick. It is a direct income stream. Every EU member state has to offer organic conversion and organic maintenance payments per hectare. Conversion is that painful 2 to 3 year period where you farm organic, but you cannot sell as organic yet. In America, that period will bankrupt you if you are not prepared. In the EU, they pay you more during conversion than when you are fully organic because they know you are taking a yield hit with no premium. In France, that can be like 450 euros per hectare per year for arable. In Germany, up to 500 plus for veggies. In Italy, even more for orchards and vineyards. Once you are fully organic, you drop down to maintenance, maybe 250 to 400 per hectare. But that money comes every single year just for staying certified. Why does EU do that? Because their goal is 25% of all farmland organic by 2030, and they are dead serious. In 2026, they are already over 16 million hectares and climbing. America is sitting at like 2% of farmland organic and barely moving. The EU figured out you cannot shame farmers into organic, you gotta pay them. But here's what Americans get wrong when they romanticize Europe. That EU money is not free. It is considered agricultural income, so you pay income tax on it, and the paperwork will make you want to move to a cabin in Montana and never talk to anyone again. You gotta log every input, every field operation, every time you move your cows. One mistake, one unapproved input, and they claw back payments, plus you lose certification. Plus, inspections are way more intense than in the US, so EU farmers are not just chilling, drinking espresso and cashing checks, they are drowning in forms. Number 4, the secret VAT versus sales tax war that nobody talks about, and it is huge in 2026. America has no VAT. We have sales tax. In most states, raw produce is sales tax exempt anyway, organic or not. But in 2026, states like New Mexico, Washington, and even some counties in California started doing extra sales tax exemptions specifically for certified organic products sold at farmers markets and direct to consumer to boost local food systems. If you are selling at a market and you are still charging sales tax on your organic tomatoes when your state says you do not have to, you are making your own product more expensive for no reason, and you are giving money to the state you could keep. In the EU, they have VAT, value-added tax, on everything, and since 2024, more and more countries have been using VAT as a weapon for organic. Denmark, Austria, Luxembourg, parts of Italy, and Germany now have reduced VAT rates for certified organic food. So conventional carrots might have 19% VAT, organic carrots 7%. That means the consumer sees organic only slightly more expensive, even though the farmer got paid more. That is a brilliant stealth subsidy. In 2026, EU is also piloting zero VAT for organic in public schools, hospitals, and government canteens. America cannot do that because we do not have a national consumption tax. So the tool is different, but the goal is the same. Make organic cheaper to buy without making the farmer poorer. Number 5, the long game wealth builder that separates broke organic farmers from wealthy organic families. In America, your biggest tax break for going organic is not annual, it is generational. Organic farmland is now worth 10 to 35% more than conventional in many regions because big food companies like General Mills and Organic Valley need secure organic supply, and investors are snapping up organic ground as a hedge. If you own that land and you keep it organic and you put it into an agricultural conservation easement, you can get a charitable deduction that is absolutely massive, often hundreds of thousands of dollars, while you still own and farm the land. That deduction wipes out income tax for years. And if you are passing the farm to your kids, that easement plus organic certification lowers the appraised value for estate tax purposes. Families that understand this are building legacy wealth with organic. In the EU, land does not work like that. Many countries have super strict rules about who can buy farmland, and inheritance tax is already super low if you stay in farming, especially organic. So you do not get that big American-style windfall at the end. You get steady annual support instead. Two totally different wealth philosophies. America says, go big, take risk, get rewarded at the sale or the estate. Europe says, stay small, stay steady. We will pay you every year to not sell out. Number 6, labor and certification cost deductions that make or break you in 2026. Organic in America is labor heavy. Hand weeding, hand harvesting, more scouting. Good news is all that labor is deductible, and if you use H-2A or local ag labor and you are organic, you might qualify for extra state labor credits in places like New York and California that are trying to keep organic farms alive. Plus, the cost of your organic inspector flying out, your certifier fees, your residue testing, all deductible. In the EU, labor is also deductible, but many EU countries now give extra social security reductions if you employ workers on certified organic farms because they count as eco-employment. That is not a thing in America, so EU is finding sneaky ways to lower the cost of organic labor through tax code 2. Number Number 7, the 2026 curveball, carbon and ecosystem service markets. This is where it gets futuristic. In America in 2026, organic farmers who build soil organic matter can double dip into private carbon markets and USDA conservation programs at the same time, as long as you do the accounting right. That income is taxable, but the practices that generated it are deductible or cost shared. So you create a loop, build soil organically, get paid by carbon market, get tax credit for building soil, deduct costs of building soil. It is a loop that conventional guys cannot easily access because their practices do not build soil as fast. In the EU, they are formalizing that into official carbon farming payments under KP eco schemes. By 2026, several EU countries pay organic farmers explicitly for carbon sequestration per ton. That is not a tax break. It is income, but it is income that only organic and regenerative farmers can really touch at scale. Now let me break this down with a dumb, simple analogy because I know your brain is fried. American organic tax breaks are like a couponing grandma who watches 6 different coupon apps, stacks manufacturer coupons with store coupons, hits the clearance rack on Tuesday and walks out with $300 of groceries for $40. It takes work, it takes knowledge, but the savings are insane if you know the game. EU organic support is like having a rich aunt in Europe who says, "Darling, I will pay you €500 a month to eat healthy and exercise. Just send me your gym logs and your grocery receipts every week and do not cheat." You get steady money, you live better. But you have to prove you are not cheating constantly. Both make you healthier and wealthier, just totally different vibes. And here's my personal stake for you. If you are watching this in America right now and you are certified organic or transitioning and you do not have a relationship with your local FSA office and an Ag-savvy CPA, you are literally donating money to the government that you could keep. I am begging you, make 2 calls this week. One to FSA, ask about OCCSP and EQIP Organic Initiative for 2026. One to a CPA who actually farms or works with organic farms. That 30 minutes could be worth $5,000 this year alone. If you are in the EU watching this and you think the paperwork is too much, hire a good agricultural consultant who specializes in organic cap payments. Yes, they cost money, but they will get you 10 times their fee back in conversion and maintenance payments, and they will keep you from getting fined. That is not an expense, that is an investment. Look, at the end of the day, both systems want the same thing: more organic acres, a healthier soil, less chemical junk in our food and water. They just bribe you differently to get there. America bets on the hustler spirit, figure it out and you will get rich. Europe bets on the collective good. We will pay you to do right by everyone. So now I want to start a fight in the comments, and I mean a respectful but spicy fight. Which system would you actually want to farm under if you had to choose forever? Team USA, where you have to hunt down 10 different programs, stack deductions like a maniac, but you could end up with huge tax-free wealth and land value. Or Team EU, where you get a steady per hectare paycheck every year, more money during the hardest transition years, but you have to live under a microscope of paperwork and inspections. Which one actually creates more real organic farmers, and which one just creates better paperwork farmers? Tell me in the comments and do not hold back. And if you found this longer breakdown valuable, if you learned even one trick that will save you money, smash that subscribe button right now for Organic Matters. We drop the real organic money and farming knowledge that nobody else has the guts to talk about. And trust me, you do not want to miss what is coming next week. We are pulling the cork on the most intoxicating investment secret of the decade. Why organic wine is a billion-dollar investment trend. We are talking how regular folks are turning a few cases of natural organic wine into 6-figure sellers, how vineyards are beating the stock market, and how you can legally store wealth in bottles that get more valuable every year. You do not drink them. It is bougie, it is boozy, and it is brilliant. You got to be here for it. Subscribe, turn on that bell, share this with one farmer friend who needs to stop paying full price for certification. We will see you on the next one. Let's grow this organic money together.